the market, Ken, as we know, has shrugged off. The trade story has been going, this kind of language has been used since what, March or April, and the markets hadn't seemed to care. But you think they will care about the midterm elections in a couple of weeks?
Yeah, I mean, I think that's the big coming story. I mean, as far as the trade stuff go, I mean, we've all gotten used to this brinkmanship, whether it's on trade or whether it's on the government shutting down from years ago. I mean, everything seems to go to the last minute before it gets solved. But what's not going to get solved until we know what the election results are going to be is what the tenor of the country is going to be going forward. And that's going to be very interesting for the markets, because if the Democrats wind up taking control of both the House and the Senate, the one thing we are going to get is a lot of uncertainty, and markets do not like uncertainty.
But, okay, I would push back on that a little bit, Ken. I know it's 5:18 in the morning, by the way, but I would push back a little bit and say if the Democrats were to take one of the chambers, let's say they take the House, that it creates kind of this stasis. And you don't have this sort of, you don't have the ability to maybe make things as politically heated as it was.
I agree. I'll push back on your pushback. That's why I said if they take both houses, you know, if they take one, I agree. I think it's going to wind up being kind of that continued stalemate. But the narrative is just a terrible narrative. I mean, the fact that we have a government so divided, I mean, which is nothing new. We've had a government divided for...
Which, by the way, that's how it's supposed to be.
Absolutely. Unfortunately, though, everything is just so politicized now. I mean, if 2 drops of water are running down your shower curtain in the morning, I'm sure there's some political reason why one is beating the other. That's the environment that we're in. So I think that investors have to look at what's going on and not take it with a grain, but look at their portfolios and say, am I really positioned for multiple environments? Because the environment we've been in is an environment where tech and growth stocks have really been on fire, leaving a whole bunch of other companies, you know, wanting for some attention when there's some really good value there.
Yeah,
so
that's, you know, it's funny you mentioned that, Kid, because when I go out, the question I get from our loyal and just amazing viewers and fans, by the way, is not about politics. It's about how much more do the FANG stocks have? I say, listen to Jim Cramer. I have no idea. But what do you think?
I think that what's interesting about the new index that they put together for communications,
the XLC or whatever it is, yeah.
In some ways, I would say they put together a nice list of companies you might want to avoid because they're trading at so ridiculously high PEs. When you look at the rest of the market, when you take them out, the S&P 500 taking out the FANGs, really only trading around a 14 times forward PE.
So you're saying tech X the FANGs, the fangless snake.
Correct.
Looks good.
Yeah, but the market in general. I mean, we're in a situation where I just started to say that the S&P 500, when you move them aside, are about 14 times forward earnings, which is not expensive. If you look at the fact that, you know, a third of the S&P 500 are really still kind of negative or flat for the year, and that CapEx in the S&P 500 is up 22%. Over a year ago, which means there's a lot of companies spending money, which are going to get benefits going forward.
If somebody hasn't done it, you may have just created a new product. There's all these FANG products. You created the X-FANG product. If that doesn't exist, Ken, you should make it.